Alright, welcome back to the channel. This is scalpingbitcoin.net. Today I'm going to continue on from where we left off. Today is December 28th. Still kind of like the Christmas break. We're just getting geared up for the new year. Based on our secret parallel lines, which can be found on scalpingbitcoin.net for free. You can see these blue ones here are based on the head and shoulders that we made during the COVID dump of 2020. Now, one thing I didn't do in the last video was go over the cyclical lines tool, which basically is going to give us an idea of where some of these tops and bottoms might occur. Depending on where you sort of decide the head and shoulders goes, it's a little bit up for interpretation, but this is kind of what I'm seeing. Maybe even something like this entire pattern here. It's kind of like the length of this head and shoulders. That was the first push up here. So that's kind of like a confluence with this move that we're seeing here. I'm expecting 30,000 plus on Bitcoin at the beginning of the year. But let's go over some more charts and we'll see if we can find similar confluence in other markets. So I'll come up here and look at the S&P 500. Let's see if we can use this one here. Nice clean chart. All right, so let's do the same thing again. We will find the COVID dump right here. Okay. And you'll see that excuse me, just let me sip some water here. You'll see this head and shoulders that occurred. Actually, let's go into the 4 hour. Might be able to see it a little clearer. But this head and shoulders occurred on the COVID dump, and if we zoom into there, we can start to draw those secret parallel lines. Oh my God. Bear with me. So while I find this, I'll just talk about those cyclical lines and how to use that tool. Basically, I believe that price happens in a cyclical nature. So if a pattern is going to be a 1 day long head and shoulders pattern, 1 day long rising channel, I think that if you measure out that distance, 24 hours, you're going to see something happen 48 hours, 72 hours, and so on, until, you know, the time confluence kind of breaks. But we use that logic. It's just kind of like part of the nature of the market. Not really sure how that occurs, but we try to, you know, add it for confluence. So if we zoomed in on the 4 hour here, you can see that there's this pretty obvious looking head and shoulders right here. Inverse head and shoulders, of course. It's just an upside down one. So something like that we can use to draw a ray. And I'm going to use this as the shoulder here, and sort of something like this right here as the other shoulder. So we'll copy that down to the head, and we'll make that one a solid line. Let's just see what we got here. I think this is the one that's sort of, oh, I can just press this. So on the S&P 500, we are breaking down from this level, if that is the right one. You can draw this a few different ways. On S&P, it gets a little confusing, I think. There's also sort of this one here. If you can see that. We'll make this one yellow. Okay, so those are the two that I'm sort of looking at. So looking at this, you can see that we're quite bearish. I believe we first broke down here, came back above, broke down again, and now we're sort of retesting here and looking like we're going to sell off into this area. 2,800 on S&P, quite low. You can see another head and shoulders pattern here to the upside. Something like this would be another area of support and resistance. Right now it's acting as resistance, you can see. So although we're bullish on the lower time frame, if in the next few weeks we get back above, then that would be confluence for Bitcoin. I think like a move up to 4,300 is quite possible, and even higher, like you see here, 43 to 44. I think we could squeeze up, but overall I think it's a little bit risky right now to be in a trade because there's all this downside here. Okay, let's look at ES. Whoops. Actually, let's skip ES. I don't think I'm gonna have time. Let's look at the dollar index. Now, this is an inverse chart, obviously, to stocks, crypto, and if we're looking at this, we can also come back to the dump in 2020 and see what transpired there as far as a head and shoulders. I should start using this, shouldn't I? So we'll go to 2020, 03, March 2020. Okay. So, because it's an inverse chart, we've got a pump on the COVID dump that happened across equities and all asset classes, essentially. Now, this looks like something like this occurred. I hope you can see that. Right, so we're focusing on this as the two shoulders and this whole area as the head. So we take our ray, we draw it across, make sure it's perfect, or as close as it can be. Okay, I'm going to copy that and add it to the top. I don't know if you can see that, but those two wicks at the top pretty much perfectly align with the angle. We'll just adjust this one up. Okay, so that's sort of confluence for me that we got the right head and shoulders pattern in that move there. And all this is, you know, a big structure break, big structure shift. A bullish dollar led to a bearish market. So we're back on the high time frame. You can see that this line is predicting a ridiculous, somewhat ridiculous target. Who knows? That would be an epic run on the dollar. So, you know, if we come back down to the daily, we zap back to that date there. We can maybe go on the 4 hour here. See how this works if we drew something kind of a little wackier like this. And even something like this. Which essentially is giving us the same headline. So you can see how well the dollar was reacting in this area. And to me it looks as though we could potentially come down at some point and retest this. That doesn't mean we can't go up first. But those are the two scenarios I'm sort of looking at. And what will really be easier to see is how this is sort of shaping up on a little bit of a lower time frame. Let's go back to the 2021. You can see here we broke structure to the upside right here. So somewhere either in here or in here there would be, or possibly even here, there should be a head and shoulders that will give us some perspective on where we're at. So let's drop down to the 4 hour. Go back to those zones. Okay. So I'm going to draw these in red, green, and blue just quickly, and you'll see sort of how I do this. We'll go red, copy it, paste it. Boom. I'm going to quickly grab the cyclical, throw that on there, maybe like that, make that red. Okay, next we got this one here, and to me I'm seeing it a little bit larger, like this. See that there? We'll make this one green, copy and paste it, move it to the head. We'll grab that cyclical, and you can see if I pull it from one side to the next, we'll get that one. Green. Okay, and then this one I think is sort of the more important of the three. So I want to get this one right. I kind of see it as this to here. We'll make this one blue and we'll make it a little thicker just for fun. Throw that, and let's see, look at, it's gonna match up almost perfectly with those three candle wicks to the bottom. It's just more confidence, I think, that we have the right trend line. And throw that cyclical, make sure it's blue. Okay, and then if we go back to current time, see we're marked up here. Almost all of the diagonals seem to have converged, although when we get further out here, you can see they're separated. So I've noticed that the red and green have really signified a top here. You can see sort of the red is a bottom here. Whoops. Okay. So we're back on the red and green again. They've lined up pretty well next to each other. And we are basically consolidating in this red zone. So to me, when that starts to happen, you don't get sort of an immediate bounce out. I think a lot of times we break down. So to me, this is looking like the dollar is going to get sucked down into this, the rest of this area. I really think this blue one is sort of the candidate, like I said. That's why I made it thicker. So maybe we kind of see that happen right around here, right exactly where that blue line comes in, which is early January. Lines up with my bias on the other stuff. I think that the first quarter of 2023 is going to be, it's going to be bullish. So a dollar going down is confluence with that. Let's quickly look at ETH. Binance. Okay. Same thing. Let's go back to 2020. Where were we at? Like $300 ETH or something. Is this it here? March 2020. Okay. I think what I'm seeing is a lot of manipulation. I don't know if this is a real chart. ETH perpetual, Binance. What even happened with this thing? So this one's a little tricky. I think that this sort of area is more important. You know, July, I think there's a lot of manipulation back here, price just kind of chopping around. But this is sort of where we really broke that structure. So when you zoom into this head and shoulders here, whoops. You can see it pretty clear that this impulsive move was started with a head and shoulders pattern. And if we grab every little wick here that's important, you can see that. Put it on the actual low. Grab that cyclical and we'll run it like this. I'm going to ignore everything that happened after, just kind of like that first initial thing. I think if we do another one and sort of stretch it out the whole amount, that might be helpful. Sort of stretch it to the top here. Okay, and you'll see coming out of this that eventually we traded to a new all-time high. Let's zap to the end here. And it's sort of heading into a consolidation just above that zone. So this, to me, makes me really bearish on ETH. However, it's hard to say if I got the right head and shoulders sometimes on these altcoins. They're really messed up sometimes. There's also this one here, which is a little hard to see. But this is kind of like another buy zone right before. It's almost a little bit like this. I hope you can see that. Got a big head here, right? So if we use that one, it might show us another perspective. But it also looks like, yeah. So you see how well it works just right away. I think if you had bought this low, oh, I actually bought this low. I bought ETH at 900 and rode it to 2,000 for a 100% move. 2,000 just because I wanted to fill in this gap here, but I hadn't even looked at this long time frame chart in a while. So I think looking at this, I do think we do get another bounce, and you can use the exact same method for your take profit. So I think something like here, or if you look closer, something like this. Those zones. So you're going to want to take profit probably in the 16.8s and the 2,000 range again. But if we do get an extended bear market rally, I think you're going to want to long back up into these inefficiencies at 2,500, possibly even 32. But yeah, that's sort of the hyper bullish scenario. I do think we could get something like this as well, you know, back to 900 again, chop around here. So yeah, it's important to get those head and shoulders areas right. It is up for interpretation a lot of the times, and I think if you check out scalpingbitcoin.net, you'll see the ones we post for Bitcoin, and we're going to be adding altcoins and stocks and stuff like that in the future. So yeah, stick around. I'll be back tomorrow with another video and see where we are. We are still bullish, and until this support breaks on our coins and our stocks, then we're going to be playing the upside. So all right, have a good rest of your day, guys. Bye.